All right, friends, welcome back to Up to Speed. As the conversation continues with the race for the California commissioner seat, we are, like I said last week, having some incredible conversations, learning a lot about some very incredible people that are running for this office. I'm joined with my counterpart, Daniel Groff. How are you this morning?
I am fabulous today. How are you?
You know, you're always fabulous, and I like that.
Absolutely.
He is the president of the American Agents Alliance, a group which is a very interesting group that dedicates their education and their services to the independent agent channel. I'm Samantha with LyteSpeed, which is an education provider with the California Department of Insurance. And today we are joined with candidate Merritt Farren. How are you, sir?
I'm doing terrific. Thank you.
Well, we are just fired up, and I always like to start our conversation with a little bit of a quote that I pulled off the web here. So today we're going to start with this one. It says, from Proposition 103 to climate-driven catastrophe risk, California isn't just participating in the insurance conversation, it is leading it. And with that, we are interviewing all of the candidates for the seat for commissioner, talking about the big levers of what is of top of mind of everyone: market availability, affordability crisis, Prop 103, rate framing framework, the independent agent channel, of course, the wildfire mitigation and consumer protection. And so with that, Merritt, I'd like to just jump right in and discuss a little bit about you, who you are, and why you're running for the seat.
Sure. And can I just clarify, can we change this from an hour to, I don't know, maybe 8 hours?
Yeah.
Because there's
Maybe.
a lot of good stuff to talk about. And I will say, as I've gotten into this, it's a fascinating and incredibly important subject. And with every day, I meet more and more people who are struggling in one place or another, whether they're insurance brokers struggling to meet their clients' needs, whether they're folks who feel like they are now priced out of California specifically. We've got the problems in other states as well, obviously. But I've met so many people up and down the state who say, Merritt, I'm the only one for my family still living in California. It has simply become too expensive to live here. And in many cases, of course, when they're talking about home insurance, they can't get any insurance at all for what is their biggest financial asset. So yeah, a little bit about myself. You viewers no doubt don't know me, so I am not a politician. I'm a businessman. I was at Amazon for 11 years in senior legal positions and business positions. I was at Disney for 11 years, ending as the lead lawyer of the Disneyland Resort, where I headed legal, guest claims, which was a insurance function of sorts, and security. Big jobs. I lost my home in the Pacific Palisades fire, as did effectively all of my neighbors and most of my community. And that led me to get involved in insurance, and I'll talk about how in a minute. My background is that I've lived in California essentially all of my life. My father was a Navy pilot. We led a middle class background at a time when it really was, in my view, simple to be middle class in California. I went to terrific public schools. They were all effectively new when I went there. Uh, we had camping vacations. We didn't have enough money to go and stay in hotels. But no one, in my family or any of my friends had any sense of want or, envy of anyone else. So it was a very simple time. I was lucky enough to go to Stanford for my undergraduate studies, and then I went to Berkeley for law school. At the time, I went to University of California, Berkeley, which was the number 5 law school in the country. Our tuition was 300 a semester. I'll stop there.
I got a daughter starting college in August. It's not even close to that right now.
I know that sounds
Yeah,
like a book bill.
yeah, exactly. So in fact, my book bills at the time might have been higher than my tuition. And look, there's one other fine lady in the race who talks about she's very proud she's gotten community college free in San Francisco. Well, effectively the University of California was free for all Californians when I was there. So look, that's the California I love. I do feel that California has a special destiny. We are a place for dreamers. We are a place for creators. We are a place for innovators. We have on the private side, obviously led much innovation in the world. And I'm proud of that as a Californian. I think it's a fantastic thing, and it's due to the kind of climate we've created here for businesses, for mindset. But we are not keeping up on the governmental side at all, right? It's very, very clear that in the decades that have now passed since I was lucky enough to be at Berkeley, there has been one poor decision after another made within our legislature, all captured by one party without challenge because of the nature of the votership here in California. And that has not been serving the state. So I saw that directly, obviously, when my community was destroyed in the fires, right? It wasn't just another wildfire created by climate risk and by people living close to wild areas. It was an urban fire. My home was not tagged as one that was in a risk zone at all, right? There were when the fire evacuation warning came, the thought was, well, there are thousands of homes between the fire and our house, and there's Sunset Boulevard, the entire village of Pacific Palisades. They will stop the fire. But as we know, there was no water in the fire hydrants, right? The fire started at 10 a.m. By 3, there was no water. There were no firemen or women anywhere in my neighborhood when all of those houses burned down. And how did that happen? That happened because our politicians allowed the reservoirs to be empty that should have had the water for the fires. They allowed budget cuts in the fire department without considering what the consequence of that would be. So what's the tie of that to insurance? I think really we are underestimating the enormous impact that massive mistake by our elected officials created and the impact it's having on the insurance marketplace now in California, right? I mean, the reality is, as you all know, of course, so much of insurance is driven by the reinsurance markets. The people who are doing their risk analysis are appropriately, guarded about what they're looking at. Realistically, for anyone doing a risk analysis for California, right? If you've gone from thinking we've got wildfire risk to we have urban fire risk because there will be no water in the fire hydrants because people have completely neglected the duty to protect the citizens, all bets are off, right? So, no wonder there's been a freeze up in the reinsurance markets. And as a business person, I don't blame anyone for saying, whoa, we don't even know how to gauge that risk. That means Palo Alto can burn down, Carlsbad can burn down, all of our neighborhoods that are within 2 miles of a treat or bush area, right? Even San Francisco has Golden Gate Park, so and Twin Peaks. So are we really to think that they're going to burn down too? So this all led me looking at, obviously after the fires, the big impact for the community was insurance. And what I observed was that there were friends who had companies, insurance from companies like Chubb and Pure, who were getting rapid help and in many cases being paid out to policy limits right away, who were being told by their adjusters that their company directive was to estimate rebuild costs in a range for Pacific Palisades of between 800 and 1,200 a square foot, right? That's a big number, but it's an appropriate number for lots of houses in the Palisades. At the same time, those who had insurance from other companies were getting, estimates from their own adjusters of as low as 375 a square foot. So, not at all realistic for Pacific Palisades. So the difference was enormous. I saw that people were as traumatized, quite frankly, and maybe even more so from the challenges of dealing with their insurance than they were from the fires. And why so? I mean, the fires, even though, I think it was especially traumatizing for people because they weren't just an act of nature, but they were an act of negligence. But the reality is, if you are dealing with your insurance adjuster frequently, assuming they're getting back to you, and they are giving you estimates that are not realistic, that are not helpful, that can be even more traumatizing, I think, on a human level than just an abstract fire. So
I
I
think
looked at
100% too. And I'm just gonna jump
please.
in here because I feel like the goalpost continues to move on, the landscape of the brush zones and the, urban areas, and just an example of what you experienced personally. When we talk about the 7 of the California's top 12 insurance carriers pulling out or reducing market share in the last, since 22, we're now entering this new topography of in the insurance marketplace where we've seen a lot of non-admitted carriers come in and somewhat save the day. because the admitted market has just been so, bumpy and turbulent. If elected, how would you really, make that a more harmonious environment for all market to come in and be, competitive and provide, policies that make sense for insureds, not only from a price perspective, from a coverage perspective as well.
Sure. Another big question, a question I love. So after the fires, I jumped into the State Farm rate proceedings. I did that to give my community a sense of hope and to get in the middle of this super important issue, right? I jumped in without a perspective as to whether or not State Farm should be entitled to its 30% increase, right? I came in simply saying that I felt that the approach to looking at rates could be different. How so? I felt that it needed to take into consideration the manner in which people were treated when they made a claim. So, I came in, and I think this is super important for your listeners, right? I'm a business person. On another interview, I was asked, well, is this a position that is really protecting consumers? Yeah, 100%. But you know what? There is no insurance for consumers without thriving insurance companies, right? And I come from Disney and from Amazon. The pressures on companies are enormous. So I am completely, I'm all about looking for opportunities to let companies thrive. And what does distinguish me, I suppose, from some others from other business positions is that Amazon and Disney were absolutely 100% on, sorry. So they were 100% in favor of the customer, first and foremost, along with running a good operation. So how would I jump in? So first of all, I would bring that perspective in. And I would note that along with Amazon and Disney, I also did corporate development at Sony Pictures. Why is that relevant? It's relevant because that role is what this insurance commissioner role needs, which is that we need that we have to have business people who are going to look for the right players who want to get in. And I've had a number of conversations. You soon will know many more of these players than I do. But it is very clear to me that there are lots of good companies who would be willing to come in if they have the right regulatory framework that lets them in, right? And so one of the things that I suggested during my hearing before a judge, the Department of Insurance objected to my participating in the State Farm proceedings. That was a little bit of a surprise. State Farm did too. That wasn't a surprise. I would have been doing that too if I were at State Farm, I'm sure. So fair enough. But one of the questions came up as to, what, at one point I suggested that if State Farm wanted to have a premium product where it charged customers more, but would pay them out within 30 days, that they should be entitled to do that, right? And interestingly, the lawyer for State Farm raised her hand and she said, that's very interesting, Merritt Farren, because we've been asking to do that for years, and the Department of Insurance won't let us, right? So I think that tells the story right there. There is layer upon layer of regulation and law in California that makes it incredibly hard for carriers, admitted or otherwise, to propose new products, to innovate on behalf of consumers.
Which is the perfect layup for our next topic.
Great.
And Daniel, your table is set, my friend.
Yeah. Well, on that, before I get to that, that was something we will talk about. But the E&S market, that's why they've been doing so much better in the industry right now. Is they have speed to market. They don't have to go through that regulatory process. They want to add a credit for something. They want to add a different deductible. They can do that if it makes sense on their books. But now, because of that, that leads us into the Prop 103 and the rate making framework. Hopefully, you know a little bit about Prop 103. It was passed by voters in 1988. It was established as the core framework for how insurance is regulated in California. The prior rate approval, rate review, the intervener process, the specific rules about the insurers can and cannot consider in pricing. We just talked about that. And nearly 4 decades later, which elements of that framework do you believe still serve the California consumers well, and which do you believe need updating to reflect the realities of what the current market condition is leading into?
So yes, I am familiar with Prop 103 since it was the mechanism that allowed me to participate in the State Farm rate proceedings, right? One of the mechanisms within Prop 103 is that citizens can petition to become admitted participants in the proceedings, and that was the
Right.
basis on which I did my filing. So look, I think that Prop 103 on the one hand provides a good mechanism for providing a opportunity to help regulate the marketplace. And the marketplace does need regulation, but it needs good regulation. The regulations that have been created on top of Prop 103, I won't say all bad, but not good, right? And so it's not Prop 103, which when it comes to home insurance specifically, is quite simple. It's more detailed on auto. It has more specific requirements for auto. But for home insurance, it's really, you can strip it down to its pretty simple concept, which is that, the rates should be fair to insurance companies and they should be fair to consumers. But what's been built on top of that is a whole series of procedures which really don't make any sense at all, that make the rate approval process very time consuming, very complicated, not friendly for the insurance companies at all, doesn't allow them to innovate in the way they need to innovate. And obviously, it hasn't really worked for consumers either. So I would strip most all of those away. And we have to get the admitted marketplace to look a lot more like the non-admitted marketplace to allow innovation. It is only through innovation that we are going to get to where we need to be. And by the way, that innovation should come from a lot of influence of technology, right? We've had a terrific fintech revolution, which we all find super helpful with Apple Pay, with online transfers of banks and everything else. We need that in insurance. And maybe, this isn't really part of my platform, it's another step further. We probably do need to, in connection with that, look at opening up our markets to be more national so that insurance companies can compete much more easily across state lines. That would also help, right? It's all about allowing the innovation to happen and setting things up so that those who innovate and innovate well on behalf of consumers, right, will be able to thrive. So we need to set the groundwork to let them do that.
So on innovation, that's a great segue into this next question. So until recently, California was the only state that did not allow insurers to use forward-looking catastrophe models or the factor of costing reinsurance into the rate filings. So if you understand forward modeling, where you're using that AI system, what is the future going to hold for us? What's going to hold in that risk situation? They only allowed them to go backwards and look at the past history. So both of which there are standard practices in 49 other states they can go forward, which are central to the current sustainable insurance strategy reform. Some of these limitations flow from the Prop 103 itself, others from decades of regulatory interpretation. Interpretation in law is always a good thing because it depends on how that person looks at it, being an attorney. Do you believe California's current rate-making rules reflect the risk environment insurers actually face? And if not, what would you change and through what mechanism? Through regulation, legislation, or a ballot measure?
Yeah, the good news is there is a lot that can be done just by the insurance commissioner, him or herself. So there is a lot that can be done right away to clean up the regulations. The regulatory process for approving things that go to rates, specifically in California, is not nearly as cumbersome as the regulatory process, the regulatory setting process for other areas in California law. So there's a lot that can be done there and should be done there right away. So we absolutely need to strip away most of that. We need to simplify. We need to let people jump straight in and innovate. As to whether Prop 103 itself needs to be redone. First of all, I don't think that's realistic today, so it wouldn't be where I would put my time and energy. I think, and there certainly may be some legislation that will need to be changed to support things. But yes, we should absolutely, of course, we have to allow people to look forward. I mean, sorry, again, I'm a businessman. I mean, what is the point really of looking backwards? And if you're going to look backwards, part of my argument in the state farm proceedings is, okay, if you're going to look backwards, and if you just want to be honest about the numbers, well, then you need to, determine whether your practices historically are matching your practices today on a go-forward basis. So yeah, of course you have to look forward.
Yeah, and I mean, when we really look back, and I know Samantha and I can talk hours on this, the carriers knew this fire situation was coming. State Farm started non-renewing policies and asking for things. Farmers, Mercury, Travelers, all the carriers were starting to ask for questions and things to be done for the future. They saw this was coming. The insurance commissioner did not. And so when they were asking for regulatory changes, things weren't getting done. Under that category, under Prop 103's intervener provisions, outside parties, most prominently the consumer watchdog, they can participate in the rate proceedings and recover fees for their participation, with consumer watchdog alone having been awarded more than $18 million in intervener fees since 2003. Supporters argue this creates a consumer check on insurer rate filings. Critics argue that it shows rate review increases litigation costs and are passed on to the policyholders and function as a subsidy to a small number of participating groups, including Consumer Watchdog. What is your view on the intervener process as it currently operates, and would you seek any changes to how it functions or how fees are awarded?
So, look, I am in favor in general of mechanisms that let the public see how things are working in government. I think that's healthy for consumers. It's healthy. Look, I come from companies, I was never asked once at Amazon or Disney to look for a way to skirt around the law, right? So good rules and regulations, people forget sometimes that good rules and regulations benefit good companies, right? Because they help those companies thrive that are going to, work honestly and within the law. And they help eliminate competition from those who are not going to do so, which presents challenges for companies that actually do the right thing. So good regulations are great. That's what we need. But absolutely. So, the way to deal with the consumer watchdog cost issues is to redo the rate proceedings so that they are streamlined and efficient, and so that if there's any need for consumer watchdog to jump in to intervene on behalf of consumers, it's taken care of highly efficiently, right? So I don't fault the process. I don't fault the idea. I fault the process. The process has been implemented wrong. So here's just one example. The process here, and I don't know what in the world the thinking was, but to get the financial data into the rate proceedings once they're in this form of litigation, it's treated like a litigation. So in the case, in the State Farm rate proceedings, State Farm didn't come forward with all of that information. They come forward with a little bit, and then the department has to file a motion to compel it. Consumer Watchdog does that. I mean, that, it makes no sense at all as far as I'm concerned. In most regulatory contexts in other areas of government, if somebody needs an approval, they come forward with all the information, right? So let the companies come forward. Let's make sure the information is simple. Let's make sure, of course, that it looks forward, not back, that it's logical. And then let's let the companies come forward with that information and on day one. And if they don't have the information, then the answer should be, gee, you're missing this information. Go back and redo your application. It's what any of us would face if we were trying to get any license for anything. But,
We say
you
it
missed,
often how
right?
the consumer watchdog is harming the consumer more than it's helping the consumer a lot of times, because it's making things, I think, more complicated. I mean, the average day to rate change is 300 here in California, where nationwide it's about 60. And that, is something that is made more complicated than I think it needs to be. In time to market, as Daniel mentioned, I mean, that's the name of the game. That's where you're going to win. And that really is what's helping the consumers and the carriers.
Yeah.
Look,
Mary, one quick thing. So on the consumer watchdog, the fees that they get paid get charged back to the consumer after the policy has been approved. So once they give them the rate, any fees that were issued out, they get what's called an intervener fee that they got to put back into the policy to charge the consumer. So really that $18 million in intervener fees was back charged to the consumer that they're trying to save.
yeah, look, I respect the general concept of speaking up on behalf of consumers. I think that helps all of us. But I don't disagree with you that the process that has had Consumer Watchdog and others intervening in the way they have has not been as efficient as we need at all. For my part, I chose not to take fees, and I didn't ask for fees in connection with the proceedings. But that's not something that other groups can do who have to pay their people. But so yeah, look, I think I think we're in agreement here. And by the way, I've had discussions with the Consumer Watchdog folks about other things. I think that their intention may be good to try and protect consumers, but they worry too much that if we go down this path, insurance companies will then, take advantage in different ways. So they have I think, resisted introducing more technology for auto insurance rates, et cetera, et cetera. So look, if the insurance department is running better, it has not been running well at all, right? I mean, Ricardo Lara has really been a disaster, and he didn't have the right background. He didn't have the right motivation for the post. We coming back to the start of this, the whole reason I'm here is that I've looked at this disaster. I looked at it with friends in the Palisades. We talked to the other principal candidates here, and my friend said, Merritt, this is a job for a top lawyer, right? A lawyer who has had a lot of experience in putting rules into place, getting policies into place, and for a business person who knows how to enable good businesses to thrive. And they pushed me to join, and that's why I'm in. So we've got to decide fundamentally, do we want to put people into these incredibly demanding technical positions who have the background that would be required if this was a business position, right? If you had a top recruiting firm looking for the insurance commissioner, what would they look for in background? And I would posit that they would look for a senior lawyer who's got a proven track record of dealing with things in the law and a business person who's tech friendly.
One of the things that I noticed on your website is you've got quite an idea to, transition the FAIR plan into something a little different. Can you talk to us about that?
Yes, absolutely. So the plan is a plan that I call Cal Reinsure, and it's modeled on what Florida has done to get out of its insurance crises created by hurricane risk. It's modeled on a plan the UK put in place to get out of its crisis there in insurance around flood. The UK has had lots of villages that are low lying that have been fine for thousands of years, but now the rains are coming in a way that they didn't historically, and there is now flood risk in a lot of places where there haven't been. So in both of those marketplaces, and then similarly, after 9/11, I'm sure the two of you know the market for terrorism insurance froze up, right? Similar to what we have now in California. And so Cal Reinsure, my plan, like those plans, takes that one singular risk that is mucking up the whole larger insurance marketplace and moves it off the backs of insurance companies and onto an authority that will collect fees from all insurance policies written, and then will happens, right? So it takes wildfire, I call it community fire risk because my house was not a wildfire, burned down by wildfire, but it takes that one risk and it moves it off the back of insurance companies so that all insurance companies, big and small, can write policies and not have to worry about that risk. And also, by the way, they may decide, right? An insurance company today might say, you know what, I want to go heavy in the Palisades. I'm working with people there. There are some insurance companies who are looking, they're saying, look, some people are really hardening their homes. Let's write heavy here. But that obviously is, no one would know better than the two of you. That can, concentrated risk is not smart if you're talking about something like fire, right? Community fire risk. So the Cal Reinsure plan would also eliminate that problem, right? Because all insurance would be moved and covered statewide for that one risk. This also comes from, my thinking around this comes from, what we did at Amazon. If you have a problem, you don't boil the ocean. You try to find that one specific problem. You try and separate it out and deal with it separately so that you can continue to do business as you need to do business in the rest of the areas. So that's the concept there. And then coupled with that are two more things which are crucial. One is we would simplify the process so that if there's a total loss like I had and my neighbors had, the Cal Reinsure plan would simply pay out to the consumer according to their policy max within 30 days, period, boom. If it ran short on money, like the Florida plan, it would be able to go to capital markets. It would be able to borrow money to increase its capital. And it would have an ability to assess a fee on other insurance policies, and that would guarantee the repayment of the bonds. The bonds would be considered that it would go to capital markets with would be similar to muni bonds, right? And then the last piece, and this is really crucial, I as commissioner would make my job community safety. This has been ignored by the Department of Insurance, it should not be. And that's something where, to your question about the law, yeah, ideally we would have better laws and community safety for the state, but in the meantime, I would come out with minimum standards for cities and counties of what they need to have in place to protect communities from fire. Standards that talk to making sure that there's adequate water pressure in the fire hydrants, even when more than 5 of them are operated at the same time. I actually spoke to a woman who used to be the principal in my son's middle school. It's a middle school operated by the city of Los Angeles. It's part of the city of Los Angeles school system. She said to me, Merritt, we have been telling the Department of Water and Power for years that there's not sufficient water pressure in the fire hydrants around our middle school, and no one's done anything. So I would come out with minimal standards. I get experts together and we would come out with minimal standards for communities. We have got to do that first and foremost to protect our communities and decrease our risk, but secondarily to assure the insurance companies and the reinsurance marketplace that we are actually going to protect, that they don't need to expect that every community is going to burn down, right? After 9/11, the government created its own reinsurance authority to move terrorism risk off the backs of insurance companies like my Cal Reinsure plan. And it also crucially tightened up the rules that protect flights better, right? We put locks on pilot doors that amazingly weren't in place before. We put tougher security at the airports, and that settled the marketplace down. So that's what we need to do here. This one thing is, is getting the whole insurance market situation in California messed up. We need to push it aside, deal with it in a good way. And the great thing about this is it doesn't stop fair plan, it just eliminates the need for it. There will be no need for anybody to be on fair plan.
I
Funny you
like it.
Questions
mentioned
on that?
couple things I caught on that. I was just at a tour at a fire station local to where my office is, and somebody brought up about how do you test the fire hydrant since the Palisades fire? And they said, well, it's interesting you asked that. And about 5 to 7 years ago, we stopped testing the fire hydrants. And I remember as a kid, they'd go out and they'd open the fire hydrants, they'd run water out of it, check the pressure, and they don't do that anymore. Because the state came in through the water board and said, no, you're wasting water. We'll monitor that for you. And then you run into the situation we had in the Palisades fire. The second
It's
thing on that one
it's
that you
mind it's
mentioned,
mind-boggling. It's
yeah,
really mind-boggling. How is that possible? And you think of the catastrophe that this has caused, the billions and billions of dollars that were completely could have been avoided. It's mind-boggling.
and then the second thing we talked, and Samantha and I, we talked about speed to market is a huge thing in our industry. If a carrier gets speed to market, it's super important. I've talked to a lot of the biggest carriers, a lot of the carriers that have started pulling out of California, and they said if we could run a separate wildfire and smoke damage deductible over the rest of the policy deductible, we could be more competitive because that's the situation that's leading to the issue. And I have clients that are high net worth clients that said, hey, I'll self-insure for wildfire. I don't think it's going to happen again. I just want my regular underlying policy. If a pipe breaks in my house, somebody trips on my property, and I can't do that for them. But now the non-admitted have come in and they started doing that, or they have co-insurance, or they have this super high deductible. That's something that's at speed to market that can be corrected in that rate filing process.
Yeah, absolutely. And listen, I come from Amazon. It was all about speed to market.
Yeah.
One of the core principles is bias for action. And coupled with it, which means if you don't sit around till you've got everything perfect, you move. And, the sort of secondary line in that leadership principle is there are very few things that can't be changed or undone once they're done. So yeah, we need to allow innovation here. And if it doesn't work, then we should fine tune it a bit. So, we absolutely have to let people jump in.
Yeah, we definitely do. I want to switch gears a little bit to the claim conversation because you are someone who lived it firsthand. And I think that's a very interesting conversation because not a lot of people that are in this seat can have that conversation. So, the time of loss is where we as agents get to have our moment of shining. And a lot of times what we find is our carriers are not shining along with us, unfortunately. As someone who sat through hearings with your carrier, that was, one of those that was a challenge in many different fire experiences. How would the department handle these carriers' conduct when it comes to delay of claims or coverage disputes and, overall not holding up their end of the bargain as to, the promise to pay, which the insured has done their part by paying the premium. And now when it's time to to shine, they're not. Like, how would you, if elected, how would you really govern that area?
Yeah, so there are two pieces to that. First of all, I think and I said this in my filings, the insurance contracts themselves, I can only believe were written in their complicated way intentionally. I mean, they just are, they're really hard for people to understand, even professionals, And by the way, extraordinarily, some of the language in there in California is actually dictated by the state. So insurance companies don't even have an option. They have to put that confusing language in there. So we would clean all of that up. We have to work together with people in the industry to come up with a really clear way to allow the insureds, the people brokers are helping, right, to understand what they're signing up for and to really understand their options when they're signing things up. And that fits also with the innovation that's going to help bring prices down. We have to let competition, we have to let people say, okay, insurance company A is going to give me this deal, insurance company B is going to give me that deal. And I understand the difference between the two. So the first thing is we need to work on that piece, and that will help a lot up front. And then secondarily, what we need to do, what the insurance commissioner can do and hasn't done, is jump straight in and help resolve the challenges as they come up. So here's a very specific thing. And there's been a lot of talk, and some of my competitors will say, oh, we need to hire more people at the Department of Insurance to handle complaints. I don't want to have like a lot of people running around chasing complaints. I don't think that's going to be super helpful. It's not a bad thing, but it's not scalable. It's not helpful. What we need to do is have the rules clear up front. And then the Commissioner of Insurance has executive powers. I would come in and say, look, in the Palisades, as I mentioned, one of the big issues were, the estimated ranges for rebuild cost. And some insurance companies have been terrific, others not so much. I would have gotten very quickly after the fires experts in Altadena, in Pacific Palisades, who come from building, who would say, here's 10 different types of homes, built at these different periods. And here is the range that's appropriate that insurance companies should be using, right? And instead of letting individual insurers have to argue about that back and forth on their own, people who have never built a house don't understand any of this. I would jump right in and help them by saying, here's the appropriate ranges, right? Does that make sense? And I would do the same thing with smoke damage, right? So Laura has finally come out. This is 14 months after the fires. Get some committee together to look at how smoke damage should influence the payouts by insurance companies. I abhor these long committees. I mean, my DNA is to get things done. So I would have gotten a group together, right? At Amazon or Disney, we would have come out with some guidance on that within 2 weeks max. You get the experts together, here's our guidance, right? And then work with the industry to help resolve these things.
So on that, I mean, and I'm going to jump in here on that because a lot of it comes down to the consumer as well. And I can tell you, I have a lot of clients that we tell them, hey, it's this amount per square foot to rebuild your house. You have this, this, and this. And the first thing they tell me, oh, my cousin's in construction. I want that lowered to $300 a square foot. And then we're like, no, we're not going to do it, but some other agent will. And I understand. And some carriers will allow it to happen because the persona is basically on the consumer to tell us how their type of home is. What kind of carpet they have, what kind of flooring they have, what kind of kitchen they have. It's, oh, I have builder grade. Nothing's builder grade. It might be builder grade today, but when they get it rebuilt because they had a damage, they want custom or they want designer. So we get into those situations as well, which make it a little difficult on us to deal with because there's no flat amount. Our office, we have guidelines that we stick with, and then it starts here and it goes up. You get into that situation, but then we get into the claims. You mentioned smoke damage. The Thomas Fire, if you guys remember that one, that started in Sylmar, ran up along the Porter Ranch, through Simi Valley, through Moore Park, through to Ventura. We were getting claims from attorneys for properties in Encino and Sherman Oaks saying, my client's got smoke damage, which, and I'm telling you that there was hundreds and thousands of those because these attorneys were sending out letters saying, I can get you money. Yeah. Now, when we talk about that, then we get into nuclear claims.
Merritt, this is your spot.
This is your spot, Merritt, because you're an attorney.
Yeah, it
If
is.
you've ever driven
Which
down
is why I have this crazy idea that there should be an attorney with senior legal experience who is, by the way, at Disney, stared down the lawyers who will want to come and try and, inappropriately pull money out of people who shouldn't have to pay. I've stared those attorneys down at Disney. I'm
So,
happy to do that.
so Samantha and I were on the phone. I've used this in every interview we talked about so far. On the 5 freeway in Commerce, I was in dead stop traffic and I could count 9 personal injury attorney billboards around me that I could personally see in that one spot. These nuclear claims are affecting the insurance premium because the carrier's got to pay out these high things. Umbrellas used to never get hardly touched unless it was very gross negligence. Now it's like half of the time we have an accident, they want to know what the client's umbrella limit is. How do you think we can work between the insurance industry and the legal industry on some tort reform to stop these nuclear claims?
Well, look, I mean, I've already been advised by friends who are those types of attorneys that all of their money is going to my Democratic competitors, right? That they fund the Democratic Party big time. They profit by rules, and this is part of the reason why our rule making is so bad. They profit by rules that are unclear, right? Because unclear rules actually don't benefit, they certainly don't benefit the consumer. They don't benefit the insurance companies either. Who do they benefit? The lawyers who will end up being in a lawsuit, right? Because there's a big dispute. As just one point, there's a new, as you might know, there's a new proposal for legislation. Ben Allen talks about this. We're going to make insurers pay interest if they haven't paid on time. And we're like, no, well, that's fine if you actually have clear rules about when on-time payment is. But if you don't, all you're doing is creating more ways for lawyers to make more money in a lawsuit. So look, I have stared down those attorneys. They are absolutely creating problems in driving up insurance costs in every line of insurance. And that's not okay. We haven't talked about that. We focused on fire. I would go insurance line by insurance line. And if the challenges are coming from inappropriate claims, then I would jump straight in and again use the executory failure. I'd be happy to try and get legislation on tort reform. I don't have high hopes on that. I want to be super realistic here, right? Because look, my house was burned down. I was a straight talking guy before. I'm even more straight talking now. So I'll talk about what I think I can do using my executory functions and providing guidance, right? Providing points of view. And if it's, by the way, appropriate and necessary for the department to send its own representatives to a trial. I've said that I would do this on behalf of consumers if they need it. I would do it on behalf of insurance companies if they really need to get somebody down, right? I mean, if somebody is literally milking the process, we need to deal with that. It's not okay. And the other piece here, and I don't fault insurance companies for this, but it is a part of the equation. Insurance companies will often look at a claim, and because they're just looking at all these legal claims and litigation across all these things, they will settle when they really shouldn't settle. Now,
That is true.
it's not an easy thing to solve. I was lucky as the general counsel of Disneyland. We were self-insured to a number that was high enough so that most of our claims that came from, you put your hand out of Splash Mountain when there are a million signs saying don't do that, and it, crushed your finger. I was able to make the decision without insurance company involvement to send 5 trials in front of juries in Orange County because they were nonsense. And we won every single one. And, I had a trial attorney in Orange County said, when you were there, Merritt, people knew you didn't sue Disneyland because you wouldn't win, right? So, yeah, we had a reputation. We held the line. And I remember one meeting, I went ahead and took it. To me, it wasn't a good claim. Friday afternoon, met with the lawyer in our offices at Disneyland, and the look on his face when I walked into the elevator, hit the down button, and said, "See you in court on Monday. Doesn't make any sense. Thank you for your proposal." The look on his face was,
But I think
shock.
in the
And,
industry,
and the jury found in our favor, and he got nothing out of it.
in the
Right?
industry, there's this tolerance of exactly what you're saying is the carrier's just writing a check and making it go away. Well, the going away now has a higher premium for the insured. That claim's going to follow them around for the next 5 years. It's going to negatively affect them. And then, we're all paying for it one way or another as a group of people here in the state. And so I think changing the mindset of like, that's an okay thing to do. I mean, my practice is primarily commercial property. I live up here in San Francisco. So the habitability claims are just like, some of the stuff that I see come across my desk, I'm like, these attorneys should be in jail. Like, this is crazy stuff. And, at the end of the day, like you mentioned, they're the ones that are only, benefiting. And it's difficult. And I think it makes our business so much more challenging to deal with. And it's harmful for our clients. So one of the things
So,
we mentioned a little bit, and I just want to go right back because I want to hear your thoughts on it. You had mentioned the insurance companies and the government and the consumers all kind of working together harmoniously to create this more positive marketplace, with the defensible space work that we could do on our properties, or, the different things, the testing of the fire hydrants and making sure that the streets have clearance. And, I'm from LA, so I know those canyon roads real well. And getting up there, and fighting fires and being able to evacuate. I mean, a lot of that stuff, there's a lot of things that we can do collectively as a community. And it's not really of focus, in my opinion. And I could speak as an agent seeing clients being asked to do things that they're doing, and then their premiums aren't reflective of the changes that they've made. So, what are your thoughts, if elected, on helping guide that process to make it more harmonious for everybody to get to a more safer space when it comes to protecting properties?
yeah, so I will say I've had enough experience to not expect any of these reforms and changes that we need to be, that we absolutely have to make happen, that they're going to be harmonious. I wish they would be. They're not going to be. There will be people who will jump in one place or another. And this is, again, I'll come back to, this is a position for a lawyer because many of them, as we know, will jump in and they'll sue. I mean, a very simple thing, cleaning up, cutting down more of the brush to protect homes. There will be someone who will sue as an environmentalist or someone else, right? And so I don't expect things to be harmonious. I do think that we can, of course, bring people together. I would absolutely use this position, as we've said here, I would come out with expert defined rules for how do we do this and how do we make them specific for your community? What should the evacuation plan look like? And I've already spoken to people in the industry who've said, okay, and I've said, look, if I can't get legislation on this, and why wouldn't we get legislation? Because those legislatures won't want to throw their local mayor, who is a supporter of them, under the bus for not having appropriate security measures in place, right? Why hasn't Ben Allen asked Karen Bass to resign? He doesn't want to alienate her supporters. So I would come straight in with these rules. And I've spoke to insurance industry reps who've said, yes, of course, Merritt, if Ventura adopts those standards and Thousand Oaks doesn't, we will be able to show the difference in costs for consumers in those two places. Right. And I would use this position. I would be out in front of the public, making that clear to people, right? And driving the conversation, driving the points of view. This is what we need to do. I will say one other thing that we haven't really talked about here, which is the community effect of insurance. So when you say, Daniel, some folks are happy to take no insurance for wildfire, they just don't think their house will burn down, things like that. We have to be thoughtful about that, right? Because that decision doesn't just affect them, it affects their neighbors. Because if their neighbors have gotten insurance, and we've seen this in the Palisades, right? If I've got the insurance I need to rebuild, but my neighbors don't, I look at my community and I think, gosh, do I really want to live with debris around me? And of course, the city isn't even keeping people from dumping things and tagging the properties now, right? There's that too. So there's a big community need to have people properly insured. That's why I like the Cal Reinsure notion, right? It actually makes sure that there will be coverage there. Communities will not rebuild if there isn't widespread adequate insurance. They get stuck.
Yeah, no, I agree on that one. I mean, there's a lot of situations that, you're talking Thousand Oaks and Camarillo. That's my area. And, we had Ventura, we have a lot of clients that we've lost a few homes in the Palisades and we lost some in the Altadena fires. And, when I hear from my customer saying, nobody's rebuilding in my neighborhood, I can't get my permits, I'm being held up by this, or, what do I got to do? It makes it difficult. And I agree. If the whole neighborhood doesn't rebuild, Nobody wants to be next to two empty lots and a burned down foundation next door to you.
Yeah, all of this comes back to good leadership, right? Which is, and I must say, I jumped into this late. I jumped into it just to make a difference. And I will admit that as I get into it, I'm having some struggles because I can't help taking a business person's mindset into everything that I see. And the disconnects between the business person's mindset, the logical thing to do to move us forward, and what actually happens are enormous.
They're here.
Well, and I think that the
Yeah.
consumers, as I've said it many on every episode, they're pissed. Like people just have this really negative vibe when it comes to the insurance marketplace from an auto perspective, from a property perspective, from a GL, from a business owner perspective. And I think that narrative can really be shifted. I mean, I know when I talk to my clients and actually say, hey, you could do this and you could do this and we could get this. And, you have these deeper dive conversations in, they're really looking to us as professionals to help provide that information. I mean, most of the time people are pretty hip and they get it. I mean, their homes and their businesses for the most part are their greatest asset. So they want to make sure they're protected. I just think that the mindset of the consumer is been just beat up. And I think we, collectively as an industry can do better to make that a more harmonious place, if you will.
Well, Samantha, you
That's
and I have
right. I
been in
mean,
this
look,
industry a long time, and a lot of clients, California had a really artificially low home insurance rates for so long. We were one of the lowest in the country because we really didn't have any issues with fires and things like that. And then people use their home insurance more as a maintenance program. Oh, my roof is 50 years old. I never fixed it. Now I get one rain and it's leaking. Now I want a new roof. But that's not what insurance was originally designed. It was designed as a catastrophe policy. And now we're having to re-educate all of our clients saying, what is that pain threshold for you? What can you write that check for to get your house fixed based on your information, Merritt, on, you want to be able to show your client can afford to pay the deductible, but what can you write the check for? Can you afford 5,000? That'll lower your rate. And it's making it to where the rate is reflective of the discount. There's some carriers I've looked at that, $5,000 deductible is the same rate as a $10,000 deductible, is the same rate as a 25,000, because there's no incentive from the insurance commissioner's office to give them a better rate for those deductibles, where the client's willing to write that check and take that risk away. As you talk about with Disneyland, they had a high self-insured. That's what that is about. That's what the deductible is. That's your self-insured amount. How much am I willing to write that check for?
Yeah, that's right. Look, and by the way, it pains me to see good working people in the industry like yourselves demonized. You shouldn't be demonized, right? That is not helpful to anyone, right? And I would be absolutely an advocate for the idea that, the reality is insurance, your caregivers and your protectors and caregivers. That's what you should be seen as. It's not helpful to demonize anyone. And yeah, but we do need to make if and I think if we can help educate the consumer, get their attention on things, make it easy for them to literally easy for them to understand the contract that they're signing up for. This will help them, right? It'll make it easy enough for them. I did speak to someone in an insurance industry professional. He said, Merritt, I think that, people are lazy. And I thought, well, okay, they are lazy. The consumer is lazy, but I wouldn't blame them for that. We're all busy and we don't want to think about catastrophe. But my office, I would make that a big priority, right? To talk about insurance and the need for it in a different way, and to remind people too that they have a community obligation here in various ways, right? That good insurance benefits not just them, it benefits everyone. I think we can do a much, much better job there.
Yeah,
I
I
know
love.
Samantha's going to want to wrap this up pretty quick because we're
No,
getting towards
I
that
love
hour.
that. And I think that there's so much room to do so much good. And it's nice. Thank you, Merritt, for recognizing us because
Yeah.
Daniel and I, we do get beat up and our staff get beat up. And sometimes, it has become not such a fun place to be sometimes. But I know that there is, a place where at the end of the day, we're doing the good work and making sure, we're selling policies based off of the risk. It's just really important that the carriers are holding up their end of the bargain. And so that I think is definitely an area that we can all agree needs a little bit of work. We wanted to also mention that, we're not here to endorse a candidate. We're not here for really politics. We're really here to just get the information out to the constituents and the voting public about, the different candidates. This primary is up June 2nd. And it's right around the corner. And, we really just want to have everybody have the floor to talk about who they are and their big levers and their mission and their vision here when it comes to the seat in Sacramento. We hope that everybody is kept up to speed.